so you can be dragging the person out. So let me go to question area, important questions. I think we have a lot of questions to attend to. Where should we start from? I'm coming. Okay, let's start from January. Okay. I wish I can understand why you people are asking this particular question. Okay, let me put the screen there so everybody can see it together. Or, okay, I'm coming. Let me do it this way. I want us to be seeing the question and be able to annotate at the same time. Are you seeing my Telegram, guys? Guys, are you seeing?
Yes.
So let's start from this King Damilare. He said, guys, I have a question in terms of marking out a structure using ABC. Kama said, to know a valid A, it must take out a liquidity and big structure. And also, after the completion of the ABC wave, it begins another. So according to the chart in the box I marked in the case study, A leg doesn't take out liquidity before, and structure and the ABC rule was respected. Now, question, do we ignore this in trading day, or do we? Okay, I think I understand him now. We have A, B, C, B leg, A, B, C. Okay, the case study is here, A, B, C. Okay, now, fuck, how I wish I can annotate on this thing. Is there a way I can draw on this chart? Hey, guys, is there a way I can draw on this chart? Hello, are you guys?
Maybe you can save it and take it to your board.
Yes, boss. Yes, sir. Yes, you can. If it's on Telegram, you're supposed. No. Maybe you already. I think you disabled the editing. You could have been able to do it before on Telegram, but because of the group settings, you might not be able to do it anymore.
Yes, I will do it in another way. Don't worry. I'll do it another way. So now I get his question, and I like that question though. Who just drew something now? That person should delete it. So the question now goes like this. He said, at this particular scenario, there's a different type of A's that we can have. Let me draw it out. We can have an ABC of the regular one is then when you have A, B, and C. Then you have A, B, and C. Then this comes as liquidity. Then this is a valid one because it took out liquidity. That is the popular one, right? Now, the major, there's another one that can come like this. When you have high, low, high, low, high. The market would come. And as for his case study, I want to draw exactly his case study. We have A, B, C. Okay, correct. The markets come again. A, okay, A, B, no, A, B, C. Then we drop this. Now, this right here, we know that this is A, B, C, but it did not feel imbalanced. That is why this is B. I want you guys to pay attention. And this is our C. So he's saying this guy did not take out liquidity. Is the person that asked the question, is the person here? Is the person here? Okay, so now looking at this price, the reason why I said the A has to take out a sort of liquidity is we want the A to be as a result of a protected I. We want the A to be a valid demand or a valid supply. But like I told you guys, there is different way that we can pick a POI as a trader. We can pick one as this, protected high, protected low. And we can also pick another one as a form of what? As a form of violation block. Now we have a low to a high, a low to a high, a low to a high. Now market gets here. We got a reaction from it and it failed. So which makes this A what? Huh? Which makes this a violation block. So though it did not take out liquidity, but it violated structure. So it can also be used to take a trade. Do you guys understand? Huh? Do you guys understand me?
Yes, we do.
So you can see that this particular guy, it failed. I will have go higher on this time frame. So now this guy was the last after this big push base and it dropped. Then the market bought not all ABC that you would trade. Not because market create an ABC and every time you have to trade it. Nah, no. If it is not clear enough for you, am I even recording, guys? Yes. So if it is not clear enough for you, ignore.
Yes, you're
Yes, sir.
recording, yes.
But I just explained the scenario when you can have an A that does not take out this liquidity. The A has to violate a structure. Am I clear in that part? Am I clear in that part?
Yes, you are.
So let's go to the next question.
Stand down.
So let's go to the next question. Okay, what is this one's question? In this, my question, though I think my able mentor might touch it when it gets to time frame, but I have to access to figure it out. Here is looking at the first time frame, it has a good ABC, a complete pullback, and the B leg failed to fill the gap, blah, blah, blah. Now, my question is, which one will price take or ignore considering my B leg or ABC comes from higher time frame? Okay, let me see if I understand what it's saying. This particular one here, okay, this is B, this is C. Okay, I think I'm understanding this question. Okay. Now, do you guys understand this question? This zone that he marked here, it is in the area of this B leg right here. But in the major move, we have another bigger ABC. That is where we react. We don't predict. That is where it comes from. Now, let me annotate this out for you guys. Let me annotate this out. We annotate, we don't predict. So now, we have, let me draw what you drew. On higher time frame, this is what we have. A, B, and C. The market have a gap right here. But on lower time frame, no, let me draw it properly. A, B, then we have I, low, I, low, I. No. I want to draw it in a perfect drawing, no. You guys should bear with me. I'm trying to get the perfect drawing. So we have drop, then I, low, I, low, I. Then we have, let's say we have an inducement, then I, then A, B, C. So now, it's now saying on the bigger picture, we have this A. This guy did not fill this gap. You guys should listen attentively. He did not fill this gap. And also, we also now have another A, B, and C here. Is the person here? Am I right with your question? So he's now asking that if we have another, you guys should listen. No, I like that guy's question. No, we have another fair value gap here. So he's asking, are we selling from here or we are going to be selling from here? So the both price action is the person that asked this question. Is the person here? Please, you guys should reply me now.
I'm not sure the guy is here. I'm not sure.
Anytime I ask a
You watch
question,
the
you
video,
guys should.
let's
I
continue.
He's going to watch the record.
guess I will not be asking that particular.
We know. I don't know. So we even free reply farm. It might be no vex. No vex. No vex.
So now,
Replying in the chat section.
Somebody is saying something. I'm trying to listen to everybody. That's why I'm doing this. Or I'm supposed to be talking to you. So if you know that you want to talk to probably your family,
You can go on, sir. We understand.
mute yourself because I would think you are trying to talk to me. Don't verse me. So now, that's where reaction and don't predict comes in. Because now, we could just wait. Instead of, there's two things. I will not set limits here. But I can set limits here. Why won't I set limits here? It's because, what if price had to go up? But I know this guy is the point of invalidation. It means if this guy is taken out, then the whole storyline is wrong. But if this one is taken out, does not mean the storyline is wrong. So with this one, I'll have to validate it with a lower time frame confirmation. But if market just go and push through this one, I can set limits right here because this is the last point of evaluation that I can sell. So that is the difference. This one, I'll wait for reaction. But if this one fail, I can set limit here because this is the last point of transaction. But the two is valid because we are not predicting, we are reacting. I can say this one would fail and it would hold. I can say it would hold and it will fail, but reaction does not lie. Am I clear? So let's go to the next one.
Yes.
Are they both money transfer? Okay, let me explain this. Okay, I'm talking about this one right now, this unchose drawing. Let me draw it out. He drew one like this. Low I, and we have this. Wait, though. This person said now Ludo. Okay, and he said, sell. I know, say now you are the common. Because you literally drew the same thing. The drawing is the same thing. I'm coming. You drew the same thing. You don't even understand the question you want to ask, but even if you know the question you want to ask. So now it's sell off. So the only difference in this drawing is this thing here. And this one. And which means this one and this one is the same thing. So what you should have, if market transfer money from this to this one successfully received it. But the question now is, this guy right here, is it protected? Is it protected? Because for you to call this guy a successful money transfer point, you must have been thinking that you want to continue it here. You must not be thinking they would induce it. For you to call a point a successful money transfer point, it has to be a protected eye. Because you can't say, because Kama say money transfer, this one is money transfer, this one is money transfer simply means if you call this guy a money transfer, it simply means market will not clear it before they sell again. But we know that everything here is liquidity. So why would you now call this one a money transfer when you know that, okay, this is an inducement? So a money transfer eye has to be responsible, has to be a protected eye, which means it has to take a sort of liquidity, which means the drawing should be like this. Break of structure, boom, 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 boom. Then we have, so this is, if this guy took out liquidity, he received a transfer from a particular guy right here. Received from here to here. From here now. So this guy received it because he took out liquidity up here. So this guy too received it because he took out liquidity up here. So if the circle now come here, just mitigate like this, then this is just a mitigation. It is not a money transfer. So we are not going to trade this one blindly until we have what? A POI inducement, which is a fake break construction before the mitigation. Then we can now sell. So now the story has started over again because in a micro perspective, this is also a liquidity hunt. So we can successfully say it has transferred it. Not because of this one, but because of the lower time frame confirmation that induce something before break construction, then we can continue the cycle again. Am I clear? Am I clear, guys?
Sir, the question
Yes,
was,
sir. Sir, I think the question was trying to ask is if that
I may
pullback,
ask
like
question,
what
may
you
I ask
brought in.
question, wait.
No.
Let me check
No,
first.
so what I meant was, let me get, it was not the second mitigation I was referring to. I was referring to the first one. That one that took out liquidity direct.
Okay, wait. Okay.
Yes, sir.
But do you guys get a message from this?
So I'll just,
Yeah.
I understand perfectly what you're saying.
So now,
Yes, sir. You understand the message you're trying
first
to
one,
convey.
it is not, see, that first one is not a money transfer because if you have something like this now, a market does this, and you have this. This is just a change of character. It is not a break of structure. It is not a break of structure. Look at this candle here. It shows that this market, I'm coming, how can I explain this thing properly? This guy is just a low, high, a low, and a high. Then we have a break of structure. So if this happen like this, I'm not going to call this guy a money transfer because it is not a protected high because he did not take out an inducement. If this guy broke this structure like this, they now took it out, they now break structure, then it is valid. The only reason that can make me trade this one that you drew is now POI inducement. That's the only reason that can make me trade it. Not based on this thing. This is not liquidity. There's a difference between this and this. You understand? So this is your own scenario. So it's not a money transfer. This one is valid. A money transfer I has to be a protected I. That is the simple arithmetic. Am I clear?
Okay, sir. Thank you very much.
Good. So let's go to the next
Yes, sir.
question.
Excuse me, sir. Excuse me, sir. Hello.
I'm coming. So let's go to the next question. Next question is this.
Excuse me, sir. I want to ask you something.
Okay, you want to ask us something? Okay, I'm with you, sir. I'm with you, brother.
Sir, I'm asking, does money transfer happens only at extreme?
Eh?
I am asking that, does money transfer happens only at extreme? At extreme.
No, it has
Or
nothing
it can be
it has
anywhere.
nothing
Like,
to do with extreme. It depends on where the B is located. Now, if we have this now, high, low, high, inducements, and market came, clear them, come back, then we have our B leg right here. So if you have your extreme right here, market might not get there because this is the inducement that needs to be cleared. So they will be looking for a liquidity, a POI that is closer to it. So it's not necessary to get to the extreme. It is all about that B and the closest liquidity to that B. But we know one thing, this is our what? Point validation. Do you get my point? So it's not necessary market has to come to it. It has to
yeah, got it, sir.
from the extreme. No. It is where the B is located. If the B is located here, and we have a fair value gap here, then this is what they would use, the extreme. But if the B is lower, then they will look for probably a key level around here to sell from it. They might not get to the extreme. But when taking this trade, you have to put your stop loss to cover up for everything. That is if you don't know how to analyze all this micro analysis. You can put your stop loss at point of invalidation, then you target your low. So it has nothing to do with extreme. It has everything to do with where your liquidity is coming from. So now, on to this next question.
Okay, sir. Got it.
This next question now, money transfer is in the form of a mitigation of an existing trend. You're asking a wrong question. You are asking a good question with a wrong term. Money transfer is not grabbing of liquidity. Money transfer is a successful mitigation of a point that created a protected I. That is money transfer. So this one, I get your question here, but that's not, this thing that you do is not money transfer. This one is not even a liquidity hunt. But as for this particular question, yeah, this is not money transfer. Money transfer is mitigation. Mitigation, but it's not just a random mitigation. That mitigation must be a protected I mitigation, just so that the next price action can mitigate it. Do you understand? So for this question, I get what you are trying to ask. So let me break it down. Even though your question is another thing, but it's giving me another question that I can explain to them. So now let me draw this out.
Maybe what I meant was if it is protected.
Okay, if it's protected, and you said is this money transfer? Look at what you wrote.
Maybe I was using the wrong word.
That's what I mean. That point is
Yes,
not. It is not. If this your price action, that inducement broke structure, like I explained the first time, then it is protected. But right here, it is not protected. It is not. So this entry that you are trying to pick from here, you are picking it from an unprotected I. Because market can just come, clear that old I, and start a new cycle again. So it is not protected at all. A inducement has to be a point that took out an external liquidity. And what is an external liquidity? An external liquidity is a swing point. And what is a swing point? A swing point is when a particular move creates a new low or a new high. So this is swing point. So this one here, it did not create a new low. So it is not a swing point. So it is not, the candle that took it out is just a change of character. It is not an inducement point. So what else?
That was the scenario.
Okay. So now, let me show you this first entry right here. Something about trading system. There will be a time that you will set some certain rules for yourself that, okay, I'm not going to do this because I don't believe in it. But that does not mean some certain scenarios it will not work. It would work, but that does not mean you have to change your system. That is why it is called a system. You have to choose something you believe in, and any other thing, you don't care about it. If because of this one price action now, you decide to always trade this concept, other time you decide to fail you, then you have tampered your system off for nothing. Me even knowing that this is an Asian eye, and this point that you even mark right here, this my arrow, is not even a valid inducement point for me. This second entry is the perfect one. But this one, you will not see me there. You will not. And this one, if you can see, this push did not break this structure under here. So this point is not even a valid inducement too. It might play out today, but that does not mean I will change my rules for it that I will not trade this setup. Because if this guy has actually created a new low right here, then I will trade it. But now that I did not create a new low, I would ignore it. Even if it plays out, that is something about discipline. Do you get my point? Because if you see something that you don't want to do and it's now go your way, don't feel bad about it. Don't because of that now say I'll start doing it because of one single win. You have to choose something you believe in. But if you believe it works for you, you can trade it. It's all about belief and what you accept to be your own truth. But for me, I'm not even going to engage because that is what they call system. System is in all odds, you have some specific price action that interests you the most, and those are the price action you would focus on. Am I clear? So now let's go for that.
Thank you very much.
Okay.
Yes, boss.
Yeah. This
Me
one
and
is
Chido, they
correct.
drag am that day.
Yeah, I like this. This is correct. Do you know why? This price action that move. Okay, let me draw it out for you. You're asking a very good question. Oh. You're asking a very, very good question. Let me draw it out. And I like that. What is POY inducement? Like I told you guys. Remember, I explained something here. I said POY inducement. Yeah. I'm coming now. I was explaining something. What did I explain it to? Hey, yeah. And I said, if it's now mitigate this guy, then boom. Then this is now a what? A valid money transfer. Not because of what? Not because of this, but because of this tiny price action that happened here. Because this is now a protected eye. So that is the exact thing that you drew. Which is, you drew that this guy is a demand, but this guy did not take out liquidity. So this one took out all this liquidity here and a break structure, which makes this guy protected now. So it is a valid money transfer. Am I clear? So you are correct with this. It makes a lot of sense. And it's exactly what I've explained earlier. Is that clear, Shido? I say Shido. Shido na Olodo. Oncho, is that clear?
Yes, sir. Yes, sir.
But that I did not like take out that structure before it's put back again.
See this one?
Yes, from Oncho's chart.
Take out. Okay, your own drawing did not take out. Okay, let me. Okay.
Yes, you know, take them at all.
Okay, wait.
So we took it out to check again.
No. Let me use his drawing.
Take
That's his own drawing. No, let me use his own. I've explained the first scenario, and this scenario too is a good thing. So now we come like this, then. But the one you drew here, you took it out too. The one you draw,
That's what I'm saying.
you took it out here now.
Yes, exactly.
The
That's what
second
I'm
one
saying.
below, the one below, Uncle.
Take this one.
Which one below?
Sir, the contraction, you didn't take out the I before to create the B.
Exactly, that's my point. That's my
Yeah,
point.
You didn't take
but
out
that's
the I, you
consolidation.
took out I. The consolidation didn't take out the I.
What is POI inducement? You have a high low. POI. Market get close to your point, then it start to buy. What would some less informed people do? They will try to join the buy now. When you see a move moving like this, sharply like this, a lot of people are engaging in this buy because they believe now that this market has created a new one. So the market hunts them, and it is valid. It is a hunt. That is the concept of protected eye now. You get? So now, this point now is now like a breaker block. It will mitigate it and a new ABC would start. And they will come here again and buy. A new storyline again. Mitigation, blah, blah, blah. So the fact that it got close to the structural point and it start to break structure internally, a lot of people will think the move has started and they want to join. Okay, let me show you. This one will feel like break of structure, they want to join here. Trendline traders want to join. A lot of traders want to join. So that's the purpose of inducement. If it takes out that I too, why would we call it an inducement? It's because a lot of people will now call this point a swing point. They want to buy, and the market will clear them out and to buy. So it's the same storyline in different diagram. Am I clear? Am I clear?
Yes.
So this one now, I don't know what the question is here, but this is what I now later explain. So as it took out this one, a new storyline has started, then you buy from this point now. That's it. So
Nachido edits this thing. Now correct me.
So you can see that. So that's the perfect explanation. I'm coming, guys. So after that, let's go for that. When the imbalance has been mitigated, it means a money transfer is about to. When the imbalance has been mitigated, it means a money transfer is about to happen or a new area of concentration is about to be created. I told you if you want to ask a question, ask with chart examples. Good morning, boss. Last session you had, I don't understand how you mark your FVG. FVG is week to week now. When you have two candles like this, how can I even do this one self? Let me go to the chart. Can you guys see my screen? So this is FVG here now. Week to week. That is your gap. Where is your FVG here? Week to week. Or you can say from here, anyhow you want it. Week to week. The last week in that zone to the new week. So that is your FVG. This one here. Where is your FVG? Week to week. This one, where is your FVG? Week to week. So FVG is not a problem now. So what else? What else? What else? So that's that about that for fair value gap. So it's week to week. When you have what's it called?
Boss, I get question now.
Oh yeah. What question?
Okay. What I want to ask when marking your protected high, can you explain to us a pullback that is valid and one that is not valid? Boss, you hear me?
I dey come, Jerry. Yeah, I'm with you, Jerry. Once this one ends, another 10 minutes break, we're going to come back again. Oh yeah. What's your question?
Okay, so one marking is this. Massive pullback day now. Sorry, massive protected high day. How do I know a pullback that is valid and one that is not valid?
Come again.
Okay, let's say I want to mark my protected high because normally protected has to pull, it has to break a structure before it has to break a structure, go down and up. How do I know a valid pullback? Because sometimes we will feel